So welcome to all of you Shiksha 360, and today basically we will discuss case study of chapter number 20, that is maturity ladder or time bucket. Clear? So I request to all of you please participate, and concept basically we have already discussed in our session. So let's start. BFM basically case study number 4. Clear? Case study number 4, that is basically totally based on the maturity ladder concept. So let's start. So basically here what they are saying, that basically given one paragraph and some values here, and there are some further more values. Clear? So basically when you will see this type of case study, clear, basically very lengthy case study, clear, basically it consists of 2 pages. Clear? As basically here we can say that. So basically first of all, basically you go directly towards the question. Clear? When this type of case study basically will be asked in the examination, basically what we have to do, directly move towards the questions. Here what say that basically question number 1, clear, question number 1 says that basically based on the above facts, clear, basically based on the above facts, what is the amount of saving account deposits, clear, that can be placed in 14 days bucket. Clear? So basically based on the above facts, clear, based on the above facts, basically what is the amount of saving account deposits, clear, basically what is the amount of saving account deposits that can be placed in 14 days bucket. Clear? Basically that can be placed in 14 days bucket. Clear? So basically we can already know that. Clear? For the saving accounts, basically the amount that can be placed in the 14 days bucket, that is volatile. That is basically known as the volatile deposits, and the rest are to be basically known as the core deposits. Clear? And the rest are to be known as the core deposits. Clear? So let's discuss what they are saying that. Clear? So as per the RBI guidelines, clear, so as per the RBI guidelines basically on the asset liability management, clear, so as per the RBI guidelines basically on the asset liability management, capital and reserves, clear, basically as per the RBI guidelines on asset liability management, capital and reserves basically are to be placed in over 5 years bucket. Clear? In over 5 years bucket, and total how many? That is total 10. So saving bank and current deposit basically may be classified into volatile and core portions. Clear? Basically this basically we have already discussed. Clear? Saving bank and current deposits, clear, saving bank deposits and current deposits may be classified basically into the volatile and core portions. Clear? Basically may be classified into the volatile and core portions. Clear? So saving bank here basically 10%, and current deposits basically 15% are generally withdrawable basically on the demand. That are basically comes under the volatile. Clear? Saving are basically 10% and current is basically 15%. Deposits are basically generally withdrawable on demand. So this portion may be treated as volatile. Clear? So basically this portion basically may be treated as volatile, while the volatile portion, clear, very important is basically this is also one more question, while the volatile portion basically can be placed in the time bucket basically for 14 days. Clear? While the volatile portion can be placed basically in the time bucket for 14 days, and the core portion, clear, and the core portion basically may be placed in 1 to 3 years bucket. Clear? While volatile portion basically can be placed in the time bucket for 14 days, and the core portion, clear, the core portion basically may be placed in 1 to 3 years bucket. Clear? The core portion basically may be placed in 1 to 3 years bucket, and the term deposits are to be placed respectively maturity buckets. Clear? And further the term deposits basically have different maturity time. Clear? So here basically the Bachat Bank, there is a bank that is Bachat Bank, has the following liabilities basically as on 31st March 2022. Clear? The Bachat Bank basically has following liabilities basically as at 31st March 2022. Clear? That is capital is rupees 1180 crore, reserves is basically 12,000 crore, current account is basically 1,000 crore, that is deposits basically in the current account is 1,000 crore, and deposits basically in the saving bank is basically 4,000 crore. Clear? It is basically 4,000 crore. Further basically term deposits, clear, basically term deposits have different maturities. Clear? Basically up to 1 month maturity bucket, that is 400 crore, 1 to 3 month 800, 3 month to 6 month, that is 1,200, 6 month to 12 month, that is 2,000, 1 year to less than 3 year, that is 1,200, 3 year to 5 year, 3 year to less than 5 year, that is 6,000. Clear? And above 5 year maturity bucket, that is 800 crore. Clear? So basically these are the different values basically which they have given here. Clear? These are the different values basically which they have given here. Clear? Now first question. Clear? Very easy question. Basically, what based on the above fact, what is the amount? So please tell fast what is the answer of this question. Clear? So based on the above facts, basically what is the amount of saving account deposit basically that can be placed in 14 days bucket. So now here basically we will see that total saving deposit is that is 4,000 crore, and under the volatile basically we have only 10%. Clear? So total basically saving deposit is 4,000 crore, and under the volatile basically that is up to 14 days. Volatile is basically 10%. So core basically means 90%. So 10% of 4,000 is to be basically 400 crore. Clear? Is to be basically 400 crore. So this one is the answer. Clear? So this one is the answer. Clear? Very straightforward question. Just you are able to understand basically what they want to say that. Clear? Basically what they want to say that. Clear? If you are not understand basically with the concept, you are not able to answer these questions. Clear? But there is not any concept, but just you have to understand basically the fact. Clear? Basically what is the same. Clear? So the basically amount can be placed that in 14 days bucket, that is volatile, and above that is basically comes under the core deposits. Clear? That is basically comes under the core deposits. Now move to the second question. So based on the above facts, clear? Basically based on the given facts, what is the amount of current account deposits? Clear? Basically based on the above facts, basically what is the amount of current account deposit that can be placed basically in 1 to 3 year bucket? Clear? Basically what is the amount of current account deposit that can be placed basically in 1 to 3 year bucket? Clear? So basically current account, in the case of current account, further basically deposits are divided in two parts. One is volatile, second one is core. And under the volatile basically we have 15%, and under the core basically we have 18%. Clear? Basically we are taking the values basically as per the given here. Clear? Under the core the deposit is basically 15%. Now basically here basically current account deposit is basically 1,000 crore. Current account basically 1,000 crore, and basically they are saying that can be placed basically in 1 to 3 year bucket. Clear? That can be placed basically in 1 to 3 year bucket. Clear? That is basically for the long time. So basically for the long time, that is basically core deposits. Core deposit, that is 85%. Clear? So basically 85% of what? 1,000. This is to be cancelled, so that is 850 crore. So this one is answer. And if they can say that basically up to 14 days, that is 15%. That is 150 crore. Clear? So it depends upon case to case. Clear? Basically it depends upon case to case. Basically what they want to say here. Clear? Basically what they want to say here. Just I request to all of you, please understand the concept and try to solve the question. Clear? Now third question. Based on the above facts, clear, what is the amount of saving account deposits that can be placed basically in 1 to 3 year bucket? Total saving deposits. How many total saving deposits? Basically we have 4,000 crore. Out of that basically 10% basically volatile and 90% core. So basically 1 to 3 year bucket. So basically we can say that it is to be core. So 90% of 4,000. Cancel out. So basically 9,436, 360 crores. Sorry, 3,600 crore. Clear? 3,600 crores. So this one is the answer. Now I think all of you are able to solve the question. Basically earlier many of you are basically facing problem in solving these questions. Now I think all of you are able to solve these questions. Now move to the last one. Clear? Many students are also facing issue in that. Clear? So basically based on the above facts. Clear? Basically based on the above facts, what is the total amount of term deposit? Clear? Basically based on the above facts, what is the total amount of term deposit basically that will be placed in various maturity buckets of up to less than 12 months? Clear? Basically up to less than 12 months. Clear? So basically we have to calculate all the basically term deposits basically till 12 months. Clear? Up to 12 months. Clear? So now let's move that one. Clear? Because this is totally related to the term deposits. So basically less than 12 months. Clear? So basically we have to calculate all these ones. Clear? So 4,000 plus 400 plus 800 plus 1,200 plus 2,000. So basically when we add all these things, clear, 2,000 basically plus 12, 3,200, 4,000, 4,400. Clear. So the correct answer here is to basically 4,400. Clear. The correct answer here is to basically 4,400. I think there is basically some typing error. So basically make it as 4,400. Clear. Make it as 4,400. Clear. So this one is our answer. Clear. So this one is our answer. Clear. That is basically what is the total amount. Total of amount of term deposit basically that will be placed in various maturity buckets of up to less than 12 months. Clear. That is 4,400 crore. Clear. That is 4,400 crore. Clear. So basically this one is a totally case study basically based on just saving deposits and current deposits. Basically saving and current, basically what is core and what is volatile. Clear. Just on the basis of that basically they will ask this case study. Clear. As basically given in the theory, basically it seems like basically very typical case study. Clear. Basically very typical case study, but there is not anything, just straightforward question basically they will ask under that. Clear. Basically they are asking under that. Okay. Now basically we will move towards one more case study. Clear. Now basically we will move towards one more case study. Basically on that basically we have discussed some concepts also. That is basically also on the basically we can say that time bucket. Clear. On the basically maturity ladder or basically maturity profile or the time bucket. Clear. Theoretical based case study. Just basically we have to understand what they are saying that and answer the question according to that. Clear. So I request to all of you, please participate in that. So let's start our discussion. First one is basically what they have given, that basically liability is given, liability or asset of 4 different banks. First one is the PSU bank, second one is the old private bank, third one is the new private bank, and fourth one is the foreign bank. Clear. Fourth one is the foreign bank. Clear. And here basically they have given that the deposits, this one is the deposits, or basically either basically liability asset basically up to 1 year, over 1 to 3 years, over 3 to 5 years, or over 5 years. Clear. Depend upon question to question. Clear. Basically what they are saying that. So let's move towards the question and basically able to understand basically what they want to say there. So with the bank wise maturity profiles of select deposit category of banks in percentage wise terms of select maturity buckets. Clear. Basically as on 31st March 2010 is as above. Clear. So basically they are given basically as on the 31st March 2010, and all the figures basically are in the percentage. Clear. So what they are saying that there is a decline. Clear. The first question basically we can say that there is a decline in rate of interest of 2%. Clear. There is a decline in a rate of interest of 2% basically for a period of up to 1 year. Clear. Basically for a period of up to 1 year. Clear. So the bank group basically which gain least, that is basically we can say that these are the assets. Clear. Basically up to 1 year. Clear. Up to 1 year. Up to 1 year. So the bank basically which gains the least. Clear. The bank basically which gains the least. Clear. There is a decline in a rate of interest. Clear. There is a decline in a rate of interest of 2% for a period of up to 1 year. So the bank group basically which gains the least here. Clear. Basically which gains the least here. Clear. So as basically from this data, clear, basically we have to go this one line, this one. So here basically we can see that which gain least. Clear. Basically which gains the least. Clear. So basically here basically they are saying that basically gains. First one is PSU banks, old private banks, new private banks, or foreign banks. Clear. So has here the figure is low for the PSU banks. Clear. The figure is low for the PSU banks. Clear. That is only 33%. Clear. That is only basically 33%. Clear. Out of the 100 basically that is only basically 33%. Clear. So the bank group basically which again least is, that is PSU banks. Clear. That is PSU banks. Clear. Because they have deposits only 33%. Clear. Under that category, or basically up to 1 year. Clear. Up to 1 year. So the correct answer is basically PSU banks. Clear. Just basically you have to check the figure, or basically you can say that basically this is total 100 rupees. 33 rupees under the 1 year, 37 rupees basically under the 1 to 3 years, 13 rupees under the basically 3 to 5 years, and 17 rupees basically over 5 years. And basically when we are calculating all this one, basically we will get 100 rupees. Clear? Basically we will get 100 rupees. Clear? So the bank basically, the bank group basically which will gain least. Clear? The bank group basically which will gain least, that is PSU banks. Clear? That is PSU banks. Now move to the second question. Clear? I request to all of you, please answer this question. There is an increase in the rate of interest. Clear? Basically there is an increase in the rate of interest. Clear? There is increase in the rate of interest of 1%. Clear? 1% basically for deposit with the period of above 1 year to 5 years. Clear? There is an increase in the rate of interest of 1%. Clear? There is an increase in the rate of interest of 1% basically for a period of 1 to 5 years. Clear? Basically we can say that basically for complete all this data. For complete all this data, there is an increase. So basically the bank group basically which will be most affected adversely. Clear? That is basically they have to pay interest. Clear? Basically there is an increase in the rate of interest basically for the deposit. Clear? Now basically they have to pay more to the customer. Clear? Now basically they have to pay more to the customer. Earlier basically if the interest rate is 6%, so they are paying 600 crore. Now basically the interest is basically 7%. So basically they are giving 700 crore. Clear? The bank basically, that bank basically will most adversely affected. Clear? That is basically that bank basically will have to pay more, which has more deposits. Clear? Basically which has more deposits in that time period. Clear? Basically for that time period. Clear? Basically which has more deposits. Clear? So here basically we will check one by one. So basically in the PSU banks, clear, total basically how much deposit basically we have under that category, that is 67. And here basically we have 46. Here basically we have just, I will subtract 100 minus 52, that is 48. And here basically we have under the foreign bank basically we have 56. So basically under which category basically we have maximum deposits, basically from 1 year to 5 years. Clear? Basically from 1 year to 5 years, that is basically under the PSU banks. Clear? Under the PSU banks. Clear? Basically we have maximum deposit. Clear? Under that category. Clear? Clear? So basically this is the, or we can say that the PSU banks basically are the most adversely affected with the increase in the rate of interest rate. Clear? The PSU banks basically are more adversely affected basically with the increase in the rate of interest. Clear? Basically with the increase in the rate of interest of 1% for deposits basically with the period above 1 year to 5 years. Clear? Basically for a deposit basically with the period above 1 year to 5 years. Clear? The correct answer here is that is PSU banks. Clear? This one is the answer. This one is the answer. So please tell fast. Above 1 to 5 years. Clear? Basically above 1. This is over 1. Over 1 basically that is above 1. Sorry. Only 2 rows are considered. Clear? I think I will do my mistake. Above 1 to 5 years. Clear? That is only 2 rows are considered. Clear? So that one here is to be 50. That one here is to be basically 39. That one here is to basically 47. That one here is to basically 48. Clear? So same, but you have to consider only up this and this row. Clear? Only this and this row. Clear? Earlier basically I will not go through properly. Clear? So basically only 1 to 3 and 3 to 5 years basically we have to consider. Clear? So here basically 50% deposits. Clear? So PSU banks are adversely affected. Clear? PSU banks are adversely affected. Now move to the third question. Clear? Now move to the third question. Same question here. There is an increase in the rate of interest. Clear? There is an increase in the rate of interest of 1%. Basically for deposit with the period above 1 year to 5 years. Clear? Above 1 year to 5 years. Clear? So now basically there is an increase in interest. Clear? Same question with respect to the previous question. Clear? Here basically they are saying that the bank will be most affected. And here basically they are saying that the bank which will be least affected. Clear? The bank will be least affected. So this one is not the answer. Clear? So just basically we have to check that. Clear? Basically under which bank basically we have least deposits. Clear? So basically as basically from this factor, this is 39, this is 47, this is 48. So basically the which bank basically have least deposit basically under that time period, that will be the least affected. Clear? That will be the least affected. So the correct answer here is that is basically old private banks. Clear? Basically old private banks basically have the least period. Clear? old private banks basically have the least period basically under that particular sector. Clear? Under that particular segment, basically old private banks have the least period. Clear? Basically old private banks basically have the least period, have the least deposits. Clear? So that is 39%. Clear? So that is, this one is the answer. That is old private banks. Clear? This one is our answer. Now move to the last question of this case study. So basically the bank group which is more relying basically on the long-term deposits. Clear? The bank group basically which is more relying basically on the long-term deposits. Clear? The bank group basically which is more relying on the long-term deposit, that is above 3 year. Clear? That is above 3 year. Clear? So basically we will consider both. Here 30%, here 11%, here 4%, here 12%. So the which bank, clear, the which bank basically more relying on the long-term deposits, basically that is above 3 year. First one is the PSU banks. Second one is the old private banks. Third one is the new private banks. Fourth one is the foreign banks. Clear? Basically fourth one is the foreign bank. Clear? So the bank group basically which is more relying basically on the long-term deposit, that is above 3 year, that is basically 30% is basically of the PSU banks. Clear? So this one is the answer here. Clear? This one is the answer here. So please tell fast, the answer of both the case studies basically will be clear to all of you. Please tell fast. If you have any doubt, any query, any question, please respond. So basically just one thing basically I will tell you, case study basically is never typical. Clear? Case study is very easy. Clear? In the place of one question, case study is easy. But the one thing basically that behind that is basically you are able to understand the concept. Clear? You are able to understand the concept. Clear? So in the upcoming days, basically we will discuss many more case studies along with the chapters, concept and MCQs. Clear? Just first of all, I request to all of you go through the theory and make command on that. Clear? And make a command on that. Clear? If you are able to understand the concept, definitely you will able to answer the questions. Clear? Case studies is very easy, but one thing that is we are able to understand the concept. Clear? So basically in this session, basically we have to discuss up to this much point. In the next session, clear, basically we will start our new topic. Clear? So thanks to all of you for attending this session.